Welcome to The Explainer. Today, we're diving into, well, literally the most extreme wealth evaporation event in modern financial history. We're going to break down the mechanics of the historic June 2026 SpaceX IPO to understand exactly how one man, Elon Musk, lost $500 billion in a matter of just weeks.
Okay, let's just get right to it. Minus $500 billion. That is the actual net worth Elon Musk lost in a mere 30 days. Just to put that into perspective for you, that is more than the total market capitalization of most companies in the S&P 500. It's essentially like misplacing an entire Walmart from a single individual's ledger in just 1 month. So how does a loss of that sheer magnitude even mathematically happen?
Section 1. The $500 billion Vanishing Act. To really wrap our heads around how $500 billion just vanishes, we gotta go back to the climax of the whole story, the historic June 2026 SpaceX IPO. Now, this wasn't just your standard public listing. It completely rewrote Wall Street's playbook. On June 12th, SpaceX debuted at $135 a share. Fast forward just 4 days to June 16th, and massive buying pressure pushed the stock all the way to a peak of $225. At that exact moment, the company hit an eye-watering $2.69 trillion market cap, officially crowning Musk as the world's very first trillionaire. But then, by mid-July, a brutal 45% stock plunge dragged the price back down to the low 120s. In the blink of an eye, over $1 trillion in market cap evaporated, taking $500 billion of Musk's personal net worth right down with it. Section 2. Creating the first trillionaire. You're probably wondering, what on earth drove that unprecedented $1.77 trillion initial valuation in the first place? Well, SpaceX didn't just sell rockets to Wall Street. They essentially sold an AI empire. Back in February 2026, SpaceX acquired xAI in this massive merger, and in their IPO prospectus, they claimed a total addressable market of $28.5 trillion. The crazy part? 90% of that valuation was banked entirely on artificial intelligence. They were renting out access to a supercomputer packed with 220,000 GPUs, drawing 300 megawatts of power, and it worked beautifully. They secured these massive billion-dollar monthly cloud and compute contracts with tech giants like Anthropic and Google. They pitched space-based data centers as the ultimate AI play, and the market absolutely ate it up. Section 3. The manufactured IPO scarcity. Now, that incredible AI story is really only as good as its market mechanics. And to unravel exactly why the stock behaved so wildly, we need to talk about a concept called public float. Simply put, the float is just the portion of a company's shares that are actually in the hands of public investors. It's the stock available for you, me, or a mutual fund to buy and trade freely on the open market on any given day. This mechanic is absolutely key to understanding the whole $500 billion loss. Think about mega-cap companies like Apple or Nvidia. They typically have over 90% of their shares floating freely. But SpaceX? This is where the structural illusion comes in. They managed to get a special SEC waiver to float only about 5% of their shares to the public. Just 5%. Now, combine that tiny supply with NASDAQ changing its rules to let SpaceX into its benchmark index a mere 15 days after the IPO. Suddenly, you have massive passive index funds forced into a knife fight over this tiny 5% pool of available stock to match their index weightings. It was manufactured scarcity, and it turned the share price into an absolute pressure cooker. Naturally, this highly engineered setup drew some fierce criticism. Many critics flat out called it a massive wealth transfer from everyday investors to insiders. Their argument was that this rule-bending, fast-tracked index inclusion artificially squeezed the opening price upward. Basically, it allowed the early insiders to cash out at the absolute peak, right? Meanwhile, it left everyday retail retirement accounts, which pretty much blindly follow these indices, holding the bag, forcing them to absorb the eventual losses when more shares finally flooded the market. Section 4. Rockets, AI, and reality. But as always happens, the scarcity premium began to fade. The initial rush of index buying slowed down and financial realities started to set in. And this brings us to a literal trillion-dollar disconnect. On one hand, you had the bulls. Morgan Stanley was looking out to 2030, projecting a massive $330 billion in revenue, leaning really heavily on those monthly Google and Anthropic contracts. But the bears? They were looking right at the present. They saw a nearly $5 billion net loss in 2025 and a staggering cash burn of roughly $9 billion in just the first quarter of 2026. Building out that AI infrastructure wasn't cheap. Even worse, those huge AI contracts, they had 90-day termination clauses. So under the surface, the financial foundation was actually incredibly shaky. And then the psychological bubble finally burst, and it burst right on the launch pad. A highly anticipated critical test launch of the Starship rocket was automatically aborted just seconds before liftoff. The cause? A failure in igniting 4 of its 33 Raptor engines. Now, for a company priced for completely flawless, decades-long execution across both AI and space exploration, this very real physical failure was the pin that popped the bubble. It triggered an immediate, brutal reassessment of their financial reality. Section 5. The Short Seller Feast. Smelling blood in the water after that launch abort, and staring down that inflated 67 times sales valuation multiple, traders went on the attack. And I mean aggressively. They shorted nearly 30% of the entire public float. Just think about that scale for a mega cap company, 30%. That translated to approximately 185 million shares, representing a staggering $25 billion bet against SpaceX's valuation by mid-July. What happened next was a perfect storm, really, an anatomy of a squeeze in reverse. Step 1. The initial IPO scarcity just disappears, because the stock is now directly tradable, and the mandatory index buying is finished. Step 2. The market starts looking ahead to upcoming insider lockup expirations, which everyone knows is going to flood the market with new supply. Step 3. As the upward momentum completely breaks, those short sellers pile in. This created a vicious, self-feeding cycle of downward price pressure, and it was exactly the cycle that ripped $500 billion right out of Elon Musk's pockets. And for the bears, that aggressive strategy paid off incredibly well. By mid-July, those short sellers were sitting on an estimated $8.7 billion in unrealized paper profits. Let that sink in. It was quite literally one of the most lucrative short trades of the entire decade, and it was funded directly by the collapse of Musk's trillionaire status. Section 6. What happens next? So the most crucial question now is, where does SpaceX go from here? The dust is settling, the valuation is being right-sized, but sentiment out there is heavily divided. Everyday retail investors, especially those holding index funds, who were essentially forced to buy at the very top, they feel completely betrayed. As equity values crashed well below that $135 IPO price, to many of them, the whole AI bubble felt like a manufactured scam. But actually, bond investors took the exact opposite view. Shortly after the equity crash, institutional debt investors happily oversubscribed a massive $20 to $25 billion debt offering. Why would they do that? Well, they completely ignored the AI hype and looked right at the floor. SpaceX's $100 billion cash reserve and the steady, highly dependable revenue generated by Starlink's 12 million active subscribers. Believe it or not, over 80% of Wall Street analysts still maintain a buy rating on the stock right now. They're viewing this massive crash as just a healthy correction for a fundamentally revolutionary business. But here's the thing. As those insider lockups expire over the next year and the public float expands to normal levels, the open market is going to be the final judge of the true worth of Elon Musk's empire. So we leave you with this. Is SpaceX fundamentally a space exploration company, an AI infrastructure titan, or was that initial valuation just a $1 trillion illusion? Let us know what you think in the comments, and as always, keep questioning the numbers.